Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're meeting with Andy Colman, the founder and CEO of Benny, about his really interesting product and how it's helping employees activate their employee stock purchase plans. So if you're ready, let's suit up and get out on the field. Andy, thank you very much for joining us today. Why don't you start off by telling us a little bit about yourself and your background, and then tell us about your company, Benny.
Yeah, Kris, happy to be here. I'm Andy, based here in Credit Union Heartland, Madison, Wisconsin. And, about me, I have a few loves in my life, including, my boo, Tara, my son, Theo, and then Benny. I'd say also maybe lately, pre-winter at least that is, was mountain biking. So that's my life in a nutshell. Mm-hmm. So, there's two things in there that are probably more risky, Benny and mountain biking, than the first two, but it's a good balance. I think that structures my life. Grew up here in north central Wisconsin, lived a few years in Minneapolis, worked for a late stage startup there. That's kind of where I cut my teeth on the startup land, and then moved to Madison, Wisconsin, where I started working in corporate FP&A. And that's how it got me to kind of teed me up for what is Benny today. So getting to that piece, Kris, simple. We're on a mission to help employees unlock the benefits that actually make them money. And so we do this through education. So making known what is the value of these. And then on the other side of it is a lot of these benefits cost money to participate in. So we help them cover that cost. And what's really cool is the amount of money that it actually costs to use Benny services is just a fraction of what we help them earn. So essentially we get to help them earn this money. And this is something that we actually kind of call lost money. So Kris, I'm not sure if you've ever had like a 401k match or an HSA or the ability to buy company stock at a discount that you didn't take advantage of. Has that ever happened to you? Where just like
probably when I was younger, I probably didn't take full advantage of my 401k. I would be honest.
Yeah, it's like that right there. That is lost money where your company was like, hey, Kris, put in $1. We'll put in $1 for you. That's a sweet deal if you have that dollar to put in. But the fact is most people don't. So that match goes unclaimed and that is lost money. So what Benny is focused on, building found money solutions. So it's like, well, if Kris would have had that dollar, he could have unlocked that dollar. And, if this sounds familiar in any way, it kind of boils down to it takes money to make money, which 100% overused. But that's how Benny got started was I had that realization because an employee stock purchase plan was put in front of me where I could buy company stock at a discount, but I didn't have the money to do it. And I was like, this stinks. But as soon as I did start having the money, I started growing my wealth. Suddenly it was like, oh, this is easy now. I get to make the extra $2,000-$3,000 a year, all because now I suddenly have a little bit more money to play with. And so that was kind of like the kickstart of Benny of like, oh, this is super valuable. And a bunch of people I know are like Andy of past who are just like, I don't know about this enough, or I don't have the cash to do it.
So how did you go from kind of seeing this gap, right, to then starting the company, right? Talk to me through that process.
Yeah.
Like, how did you do that? Because you're working somewhere, you see this opportunity. There's going to be a little bit of risk if I step out and do it. Tell me about that decision and how you came to it.
Oh, 100%. And it was a night by night type thing, right? It's like, hey, what we are essentially. So it started off building just education, where I was just like, oh, a lot more people need to know about this. So built up, a Squarespace website. I'd never done it before, but I was just like, let me just throw this up there so that when people are searching about their employee stock purchase plans, there's some information from them. And that evolved into realizing like, oh, the people kind of sitting next to me at work are not taking advantage of this. And I didn't necessarily want to approach them and be like, hey, let me help you, because that's where my bread was coming from. But, it's like, okay, and it's probably not a great idea to be like, hey, coworker XYZ, let's lend you some money. I could see that going badly in a few different ways. One is like company finds out Andy no longer has a job. Two is I now have to work with someone who didn't pay me back or something like that.
Yeah.
So what I did was I was like, hey, I'm going to put this education out there. And I created a little form, which was, a pseudo application. And people started filling it out. I was like, huh,
Wow.
okay. So there's a sign. And, I'll skip a few steps here, but suddenly it was like, hey, this guy, I've talked to him a few times. But funny enough, his name was Kris. And it's great people. And it was like, okay, he needs $20,000. I looked at my partner, Tara, at home, and I'm just like, hey, I'm about to send this guy $20,000 via ACH. He's going to use it to buy his company stock. And, I've done the preliminary underwriting based on like what I know at that time. And we're good with this, right? And so she gave me the nudge and said, yep, like, let's do it. And yeah, long story short, he did it. He made $5,000 off of it, paid Benny back a little bit. And it was just like, oh, this could work.
What was the turnaround time between that ACH and you getting your invested money or your fee back?
So yeah, and this was a very unique employee stock purchase plan. So like, just to give a little background, each company can structure theirs differently, and these will be only for publicly traded companies. So think your Microsoft, your Baxter Industries, those types of companies that actually offer stock plans.
Right.
This happened to be a Canadian publicly traded company, and so they had a weird one. And so the short, and this helped with the risk level a little bit. It was like 1 month where the cash was outlaid.
Okay.
His company was able to buy the stock, and then he returned it. So like that helped with the risk and why the amount was a lot larger too.
Right.
But so in that first case, it was like a 1 month outlay, and yeah, it was cool. It's like it helped him earn a bunch of money.
That's great. So does Benny work exclusively then in helping people take advantage of their employee stock purchase plans, or are you participating in those 401ks and other things you mentioned earlier?
Yeah, great question. We are focused on employee stock purchase plans. So we see opportunities with 401ks, HSAs, but Kris, the opportunity with ESPPs, there's 15.5 million employees within the US that have access to this. And, collectively they're leaving 30 billion plus on the table each and every year. So there's plenty for us to dive into here and stay focused. But yeah, I think there's a lot of what we're building today that are the building blocks to help drive engagement and those other benefits. But the greatest thing about the ESPP is there is the ability to get repaid. And it just like the structure of it does allow for a lending product, what we call a Benny line, to be used to facilitate this and allow for repayment, allow for the employee to earn money and realize those earnings versus like a 401k, which has a much longer gain realization timeline.
You talked a little bit about kind of growing up in the heartland of credit unions in Madison, Wisconsin, or being from there now. How do you fund the actual lending that Benny is doing? Are you working with credit unions and banks, or is that something you're doing entirely through private money?
Yeah. And so just a quick tangent of growing up in credit union heartland that you just reminded me of like, yeah, I did. Went to like co-op/credit union summer camp as a kid.
Yep. Wow.
Shout out to Camp Kenwood out in Chippewa Falls, still around today, and looking to send my son there this summer. It's a conversation. Yeah. Because it's overnight, which we haven't done yet. But so yeah, truly grew up in like first banking experience was Taylor Credit Union, and so yeah, definitely grew up in the heartland, just Wisconsin, like. It was surrounded. So as far as capital today, a little bit about how Benny's been kind of approaching the market so far. We kicked this off, Kris, from, what I'll call like the Bank of Andy first, which, very quickly ran out of money, but was proving the concept.
Yes. Your dear partner was so good to support you to a point, Andy.
To a point. Yes. Yes. And still, I would say plenty of support still coming today, Kris. Just, as a founder, I'm sure you realize and see. Yep. And so we evolved from Andy's balance sheet to Benny's balance sheet. So we went out and raised some additional venture capital.
Gotcha.
And we were able to then use that to fund the next Benny lines out there. So we are now moving beyond that. And so we actually got to an interesting stage where we were providing, like we were the lender, we were doing everything, we were owning that customer across the board. And we got to an interesting stage of, okay, our balance sheet, VC funded, like we can't raise enough money to continue funding these, right? At $8,500 for a line of credit, okay, we can do 1,000 lines of credit, and then we're tapped out.
Yeah.
It's like that's not going to get us where we want to go. We want to unlock this next level. So there was two paths we could take. One was the alternative lender, think hedge funds, think, hey, private credit market. And then the other was like, hey, we have these employees who work at these publicly traded companies like Microsoft, Intel, or, Baxter or United Health Group. And we started to see a trend because like we were providing the service for them. Essentially, we would see like where their operating account was from. And it was like, oh, like there's all these credit unions being used. Like, why is everyone using Fintech? And so we became, privy to the fact of like, oh, Fintech is on campus at some of these places. VCU is on campus at some of these places. Right. They have Target Credit Union. They have UHG. It's like, huh. And then it was like, well, why are they taking a line of credit from Benny, kind of a semi-unknown fintech, which, we're happy they did.
Yep.
Like, what if we married the ability for us to provide software to the credit unions inroads already, plus their ability to lend at a much lower cost of capital to deliver a better outcome for that member? And so that was the path that excited us versus continuing to raise a bunch of debt, do it all on our own balance sheet, which, is a whole lot more fin than tech. And so that's what we've moved into recently is now looking and then like getting pilots moving with credit unions to be like, hey, we already have these users. We're teeing them up. We're waitlisting them. We need a place for them. And, we think your credit union's a perfect place to provide that funding. So for the credit unions, we provide member acquisition, and then we use our software to actually make sure and facilitate the money movement to make sure everyone's essentially participating. We're putting the risk mitigation and control. So it's like, hey, Kris, you really work at Microsoft. We are making sure you continue to work at Microsoft. Because as long as you do that, we know you're going to make money at the end. And what's cool is if you make money, your likelihood to repay is a heck of a lot better. And so we play that role of acquisition and then what we call like ESPP management, which is, kind of sits alongside servicing.
It's a pretty awesome opportunity when you think about the kinds of relationships that some of these large employers have with credit unions, right? They have a credit union that supports their employees today. Why wouldn't that be a perfect marriage? To your point, talk to the credit union that works with the institution and gets, a variety of paychecks and things coming in from it. That is a really great marriage for those to come together.
Yeah. And I think it's yes. I think so too.
Are you? But you talked about getting some. You talked about getting some pilots off the ground. Are you looking for more credit unions to participate with other kinds of employers?
Yeah. So I'd say like yes, we are looking for credit unions. So the ones with the SEGs, select employer groups, within like the realm of the Fintechs or the BCUs, like those are great examples of like who we want to serve because like we're already serving their employees and we can further that mission real quick.
That's right.
I think there's also the opportunity to work with credit unions that have a broader field of membership ability because we are in a remote first world. A lot of tech workers are across the board. And so, if we can, we're looking, people need the service across the United States. And so if we can feed it to, a few different credit unions, instead of just having to piece it out by, county by county,
right,
that is attractive to us.
For sure. That's really a phenomenal market opportunity for credit unions. I mean, the credit union I came from was an IBM credit union, right? And at one point we actually held IBM stock as loan, for loans, shared secured loans, I guess stock secured loans, for members. So how cool would it be? This is just an extension of modernization of that, really.
Oh yeah. Right. And then because like what's really cool, cause like, you got me excited there, Kris, because it's like, cool. You then just help them earn extra $1,500. Yes. So like every 6 months, that's a pretty cool value prop for the credit unions. Like, hey, we can give you a raise. But then you can help them do something with that too.
Yes.
So it's like, okay, you can keep an IBM stock, but they're very real. You might have concentration risk there, or you might not have an emergency savings account, or you might not have an IRA. And so it's like the order of priorities it could be different. So it's like, okay, we can then help move that into an emergency savings account. We can then help put that into an IRA, start looking at that non-interest income.
Yeah.
But to be part of essentially creating the really cool problem of now you have more money, what to do with it.
Right.
That is a cool spot to be in.
Yeah. It could also be a way of allowing them to diversify their, concentration risk, right? If all of my stock is with my employer, right? That's really a
Yep.
phenomenal model. So tell me a little bit about how many customers do you serve today on a regular basis? Is it typically what's the regular term for the loan? Tell me a little bit more about kind of how you do the operation side of your business.
Yeah. So to kind of prove this out, we did $2 million of our own lending.
Mm-hmm.
And so like the results on that are, sub 1% or, like 99% performance.
Mm-hmm.
Like, yep, we get repaid. This has unlocked more than $350,000 for those employees. Like that is real money.
Yeah.
That they then have an opportunity to go and do with. So that is kind of where we proved our grounds. And so we've shut off the tap to doing our own lending today to pursue partnerships because it's like, yep, here's the portfolio.
Yep.
And what's really cool about this, Kris, is the portfolio. We have full performance on that versus like, an auto or something else that it's going to take 5, 6, 7 years to actually see it mature.
Right.
It's like, oh, no. These are quick, short 6-month turnarounds,
Wow.
low dollar lines of credit that allow you to acquire a member. And so, we use our balance sheet to prove that out.
Mm-hmm.
And as far as operations, so how it works is essentially we work with credit unions to set up a Benny line, which is just a specific type of line of credit that they set up in their core that says, hey, this is how the line of credit is structured.
Mm-hmm.
The tweaks there, vary from the monthly minimum payment. We just want to make sure it truly works for the employee to not add additional cash flow constraints because like that is the problem we are solving. So we work with them to set that up. The user onboards at Benny. We then say, hey, here's Credit Union XYZ. It's Benny line sponsored by Credit Union XYZ. We collect all the information to underwrite that, pass it along to the credit union. We get that approval, denial. We kind of know what their credit tiers will be, so we know where that's going to sit. And then we're able to pass along that approval. And essentially, it's like, okay, we just need the account and routing number to interact with that line of credit. And Benny handles that piece, which says, hey, Kris, you have a Benny line. We've verified you have an employee stock purchase plan. You're going to have suddenly $900 missing because you're fully participating in your ESPP. We are going to offset that using the Benny line by putting $900 into your operating account. So we draw $900 from your Benny line, put it into your operating account, and you're essentially cash flow neutral while still maxing out your benefit. So we do that over the 6 months because that is how employees contribute to this benefit. It's through payroll deductions. And so that's the pain that we're solving. It's like, the Benny line offsets that cost. At the end of the 6 months, that's when the company looks at the stock price on that day, applies that 15% discount because that is where the value sits.
That's right.
That is where that's where the lost money is, right?
Yeah.
So then it's like you put in $8,500, you now have $10,000 worth of stock an hour later. Cool. $8,500 gets liquidated worth of shares to repay the loan. Then the employee's left with the $1,500 worth of shares that they get to do what they want with. So there's that opportunity to be like, hey, do you want to reallocate that to emergency savings? We can move the money there. We can help set up that account. Do you need that IRA? We can move it there. We can help set up that account. So that's where that additional opportunity comes to help that employee then.
So that was going to be one of my questions. The Benny line isn't accessible. The member may be able to see it online, but they can't actually make transfers from it or anything. That's actually handled by you directly to the employee stock purchase plan.
Yeah, or like that is, we control like the draws on that because it's got to match their deductions.
Right.
But yeah, so it is put into their bank account for them to do what they want with because we know that there's an offsetting amount that the company is withholding onto.
That's right.
It's like,
So keeping it simple, if as a part of my employee stock purchase plan with IBM, I am paying $100 a paycheck, I'm getting $100 from my Benny line put in my checking account that matches, that offsets that. That way I've not had any decrease in my take home pay, but I still get the benefits of getting that 15% buy on the stock.
Exactly. Boy. And then at the end, let's say you give up 2% of that 15% for the fees, and you're left with 13% without having to come up with the cash. And again, those are just, 13% of the 50% discount.
That is great.
I tried to make it more simple, but I think I might have complicated
No,
it.
no, 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 no. How long have you been in business? When did you start, Andy?
Yeah, so December of 2021 is when we like kick things off. And so it's been an interesting road of, yeah, like I talked about us being the lender, going through and like talking to and like getting term sheets from hedge funds,
Mm-hmm.
alternative lenders. Like it's been a very interesting road, Kris. But I'm like, obviously, I'm most excited about where we're at today and just like,
Right.
hey, I think we figured out that marriage that makes a heck of a lot of sense.
That's great. That's great. So one of the things that credit union folks are going to ask are what kind of losses have you seen? You said 99% performing. What is the typical kind of scenario where, or not is may not even be typical, right? What's the scenario where somebody gets jammed up or has a problem?
Yeah, so I think it really came from like the early days,
Okay.
and like we've already kind of learned
Okay.
where it was like, okay, Andy's first pass at underwriting, um, it's gotten a little better, Kris. Where it's just like you said you did that, but yeah, so now it's like okay, we use APIs like Plaid to tie into bank account balance. So right, it's like hey, if you suddenly are moving all your money out of your bank account,
Mm-hmm.
that's a good reason for us to stop.
Yeah.
We now added additional employment verification. So it's not like,
Gotcha.
right, right now I could go in 15 seconds, send you an Intel pay stub that says Andy works there.
Right.
Like they are very easy to generate. So it's like, oh, no. We should stop doing that. We should move to, uh, Plaid income verification,
Right.
payroll. Like let's tie in via API to the payroll.
Right.
So we've shored up a lot of those. So where it was kind of coming where, and like all these people I do believe were employed at the companies, but it just came with, in those few instances, just, hey, there's an opportunity for more control to be added. And we've gone out there. And so it's like, I think we can drive that to even lower, based on like the additional features we've added where it's just like, yep, we are tied into your payroll. We get to see your $500 missing. We get to tie it to there. And so you get to perform, I'd say secured like or better while charging or, having the opportunity to deliver yields that are for unsecured consumer lending.
Yeah. And you've learned the lessons. You've learned the lessons. You can bring the value of that to the credit unions that you're working with. And that is certainly some of the secret sauce. What do you think the biggest challenge you had, kind of developing the product or getting to this point, and how did you overcome it?
Yeah, I think there's been a lot of interesting things. So the first thing that pops to my mind is actually like team. And that starts with me, Kris. Like, I don't know if you remember how I started this story. Was like I was just working in FP&A, so financial planning analysis, and like this is a cool thing. I should just build a website. At no point was like, hey, I want to be the leader. I want to be the founder, a CEO of a company,
Right.
and started developing the skills to do that. Much later, when I looked at like what we were doing, and I was like where what are we missing here, guys? Like what? Oh, it's like there should be someone doing that thing of making sure like being a CEO, being that like it was like duh, but it wasn't. I was just like out there to build and like doing this.
Yeah.
But that was a realization that was just like, oh yeah, there's a whole lot of skills that go along with what that entails. To even be like founder, I'll differentiate of like builder, founder, and CEO. Each one will have different skills, different opportunities, different things they bring to the table.
Right.
But that was a big thing. And then finding the talent, right, is also just, it's hard to build a startup. I think I've learned a lot along the hiring route of just like how to bring in A+ talent. But you don't get to be better at that without having some trial and error there. And so, yeah, I think that was a great opportunity. And then also just unsurprisingly, regulated industries add a different, like, there's a difference between selling and like, I love all the SaaS tools we use, but right, there's a difference between building a SaaS tool and selling it to Benny as a startup versus Benny selling to a financial institution.
Right.
And so that's been a fun road of learning, but it's a road. It's not a short path.
No, not at all. Not at all. I'm really just fascinated by the simplicity of your solution. And I don't mean simple as in easy to replicate. I mean like it's like seeing somebody do something for the first time. Like, of course that should be there. Of course that's how it should be done. You know what I mean? I'm very impressed.
Yeah, it's a no-brainer, right? Like that's yes.
Yeah.
Kris, I love you get it.
Yeah. Holy cow. So riddle me this. How do you what do you think is in the near future for Benny, right? Are you you're talking about working with credit unions to create these pilots and really kind of bring in their capital as being able to be lent on using your tool set, really kind of using your skills of the company and the tool sets that you've built. Do you think you would take investment money from a credit union if they were interested in investing in Benny?
Yeah. To even take a step back, equity alignment is something I believe strongly in.
Mm-hmm.
Like we deal with employee stock purchase plans, like people should be able to take advantage of that.
Yes.
And so where I see it from a Benny then cap table perspective, he's like, yep. What's the best incentive alignment? Skin in the game.
Yeah.
So yes, I think that is a attractive way to go about one, driving a successful partnership.
Yeah, certainly making sure everybody's on the same page. You talked a little bit about the challenge of navigating the regulatory landscape. Is that something? Did you do that all on your own? Was that staying up and reading everything you could online, or did you actually did you engage somebody to help you through that process? Because that's a common problem for fintechs in our business, right? And it can be a real hurdle for some. How did you overcome that?
Yeah, so it was, well, I'll even like very early on, I didn't talk to anyone and I was just doing my own research. Mm-hmm. That was the wrong move. Like as soon as I started talking to folks, it was just like, oh, right. Like this is like very early days when protective of the idea of this, like, oh yeah, no one else can do this. This is so special. It's like, no, Andy 3 years later is just like, yeah, tell everyone. If someone's crazy enough to try and do the same thing, let them. Yeah. They'll help carve the path. Mm-hmm. So one was like a lot of research myself. This, again, this was pre-ChatGPT, which now is just like, oh, I would love to read a Wisconsin statute on lending, plug it into ChatGPT and have it read it back to me.
Yeah.
Because Andy is at his worst when reading statutes.
Yeah.
I'm just like, I don't enjoy reading things 7 times.
You wonder, except for lawyers, right? You wonder who's really good at that. Like, who wants to do that? You know what I mean? So they're written that way to confuse us. But go ahead. So a lot of research, talking to people to do it. And then go ahead.
And then we did do an accelerator too. So we did a Techstars accelerator back in 2022, and so we are connected to some great minds there, plus like a legal resource. And so there was we had an opportunity to engage with like the, one of the upper end high tier law firms for startups. Mm-hmm. And like my quick TLDR on that was like, paying you $1,200 an hour. We can't have a conversation because like, this is just, nope, I can't do this. And so then I went back to one of like my local lawyer who like, he's like, got through the state of Wisconsin, but like, yep, I can text him right now and he's going to respond in like 4 minutes.
Right.
And so we did use outside resources was the point for things. So like my advice there is like sharpen your questions. And don't ask for like what it was like, don't necessarily ask for like yes or no on certain things, but like, here's what we're doing. Here's what we're trying to do. How do we get from here to here and what should we be aware of?
Right.
Was kind of just like, there was a lot in learning how to frame the questions to get back the results we actually wanted to.
That's a really good point.
Because, give us something actionable, I should say.
Yeah. Asking the wrong question to a lawyer can be very, very expensive.
Yeah, and then if you ask the wrong, it didn't even get you what you needed. Right. You still have to pay for it.
That's exactly right. That clock is always rolling there, right? And we all work with great attorneys, and you need them. That's important, right? But
yes,
man, that was one thing I personally underestimated. Founding a startup was just how many lawyers I was going to need.
Yes, and there's different types, right?
That's right.
It's like, oh, you don't do all law.
Yes, of course.
But
yeah. So tell me about this. You talked a little bit about the technology, right? Tell me about how do you How do you go about building and delivering that technology for the credit union partners that you're going to be working with?
Yeah. So a lot of the work we did on the front end was to acquire consumers.
Mm-hmm.
So, we have that dialed in. Employee comes in the funnel. We understand what kind of information they need. And they're, everything from, BennyBot, which is like, hey, what is a great resource? Or we kind of have a philosophy of when it comes to complex financial decisions
Mm-hmm.
or even benefits, what it takes is essentially non-judgmental, but accessible communication. And by that, I mean, like if I go to my financial advisor, one, I have to have a financial advisor. They have to fully understand where I'm at from a financial perspective. They have to understand my benefits package in order for them to deliver an answer to me.
Mm-hmm.
What's really cool is through the use of like language models, it's like, oh, there's actually a very optimal path here. If you know what this is, and you can just ask me questions and have it readily back. So it's like, hey, Kris, if I put in $1,500 and I work at Microsoft, what is my return on my ESPP every 3 months? Okay, now what if I do it at this contribution rate?
Mm-hmm.
And answers are instantaneous. So it comes back non-judgmental. So it's like there's no problem with people not answering. Like you don't have to worry about looking silly, right? And you can apply that to any
Mm-hmm.
benefits out there of just health insurance. Like honestly, I don't know what it would cost if I went to the hospital right now.
Mm-hmm.
No idea.
Right.
So that's part of what we've developed on our side.
Mm-hmm.
Is like, how do we educate and acquire that member? And then when it comes from the credit union side, essentially it's like, okay, we acquire all the information,
Mm-hmm.
which is the information the credit union needs to underwrite. We pass that along to the credit union, and that can be through SFTP or API,
Mm-hmm.
or we can even put into like a third party LOS almost,
Mm-hmm.
where it's like, hey, we both have access to it. We understand what the decision tree is.
Yeah.
And from there, we'll be able to drive action where it's like, yep, was that approved by the credit union? Because they're actually the ones underwriting it. Or was that denied? We can then have that Benny line then show up based on that response, assuming it's approved, into the Benny platform. And then, along with that, we are passed along the account and routing number so we can actually interact with it.
Mm-hmm.
And, we're off to the races. And so from an integration perspective, it can kind of take a few different flavors. It can be as simple as peer referral,
Mm-hmm.
which is just like, hey, let's prove this out. Where it's like, hey, First Tech has this, BCU, whatever it might be. And that's like the low tech solution.
Yeah.
Where, and then we could get deeper into that where it's like, okay, yep, let's actually push information to the LOS.
So you mentioned customer acquisition. Imagine there's some percentage that would be the credit union's kind of advertising the service. Hey, come get this special loan solution to help you take advantage of your employee stock purchase plan. So it's being kind of driven by the credit union. That's probably for people who are already members, right? Do you still have non-members coming to you that do you envision then saying, oh, welcome, Kris, we're going to recommend you work with Coastal in Raleigh or somebody else. So, tell me a little bit about the member acquisition side.
Yeah. So one is you nailed it, right? There is the distribution to existing members to deepen that relationship. Right. So it's like, awesome. You know where these people work. Let's pre-approve them. Let's move and get them engaged and get this additional way to deepen it.
Right.
For people outside, well, it's like then there's the eligible non-members, and this will be more for a seg-based credit union. So it's like all of Microsoft employees don't bank at
First Tech,
credit union XYZ.
Yeah.
Yep. First Tech. How do we engage them?
Right.
And so by offering a differentiated product, because as much as you look at the financial products out there,
right,
being able to be differentiated truly is a very tough thing,
mm-hmm.
right? It's just like high yield, whatever it might be. But, this is an opportunity to be truly differentiated in what you are offering. It's like, mm-hmm. Hey, Kris, we know you work at Microsoft. Yeah. We are listening to you. We now built a solution to fund your employee stock purchase plan.
Right.
Now we can acquire those eligible non-members for them. And then, from anyone that comes in from the outside, maybe not being part of those segs, it's a decision tree, right? It's like, okay, Kris came in from Texas. He, lives in these counties. Mm-hmm. Okay, that's Texans Credit Union.
Gotcha.
So right there is the ability to then match employees that might fall outside of those typical field of memberships.
So you could potentially do it by employer. You could do it by location. You can do it by those other. Okay, that's really very powerful. If a credit union is interested, Andy, in learning more about Benny, where should they go? How should they contact you?
Yeah, so I'm always I'm always able to be reached at Andy, ANDY, at heybenny.com. You can also find us at heybenny.com. Take a look around. And then I'll also be at GAC, I guess, depending on when this launches, 2025. Just so we're clear on which year.
We're not that backed up putting episodes out. In fact, I think that'll be just before GAC. So there'll be lots of people traveling to GAC listening to this. That's the best part, Andy.
Yes. So come and find me at GAC. Drop me an email. You can always find me on LinkedIn as well. Andy Colman, founder of Benny. Pretty easy to find me there. So those are great ways to reach out to me.
Awesome. So Andy, thank you very much for joining us today. I really am so very impressed by what you've built at Benny. Thank you very much for joining us. We will see you soon. Okay.
Yes, Kris. Thank you so much for having me. This has been a blast. I appreciate it.
Awesome. And don't forget to see Andy at GAC. Look him up. It's a great product. I'm really impressed by it.
This podcast is sponsored by Constellation. We're empowering community financial institutions with innovative digital solutions, powered by Fintech, driven by your roadmap. Join us as we navigate the future of digital banking together. For more information on how we can be your partner for digital transformation, visit www.constellation.coop.
What a great conversation with Andy. I really am very impressed by the elegance of his solution, and would really encourage all of our credit union listeners to check Benny out and see if it isn't a great product you could offer your members. He is going to be at GAC. We are going to be at GAC. Constellation will be there as well. We look forward to seeing you. Travel safe. Like and subscribe this on your platform of choice, and we will see you next time.